There's this huge wave of uncertainty hitting the software world, and it's all because of AI. But there's one company that seems to be riding that wave perfectly. So today, we're going to break down how they're turning what could be a massive industry threat into a really unique advantage. All right, so let's get right into it. What is the central problem facing pretty much the entire software industry today? Well, there's actually a term for it, and it captures this very real anxiety that's just rippling through the market right now.
They're calling it the SaaSpocalypse. And look, the core fear is actually pretty simple, but it's also profound. For years, the standard software business model has been all about selling seats, right? You pay for a license for each user. But what happens when one super efficient AI-powered user can suddenly do the work of, say, 10 people? Well, the number of seats you need just plummets, and so does the software company's revenue. That's the threat.
But here's the thing. This threat isn't hitting everyone the same way. And that brings us to this really fascinating counterexample, a company called Blend Labs. They just posted a surprisingly strong quarter, and they seem to be completely defying the industry's biggest fear.
So how exactly is Blend bucking this trend? Well, their recent financial results, they tell this really compelling story about a major turnaround.
I mean, just look at this. The sheer scale of the swing is, well, it's remarkable. They went from a nearly $13 million operating loss in 2024 to a $15 million profit in 2025. That's not just a small improvement. It's a fundamental shift. We're talking about a nearly $28 million turnaround in just one single year.
And if we zoom in on their most recent quarter, you can see that momentum is still building. They posted $5.4 million in operating income. That's basically the profit from their core business operations, and that's a huge jump from the previous year. It just goes to show this turnaround isn't some fluke. The business is getting fundamentally stronger.
And you might be wondering, okay, are they just cutting costs? But this profitability is actually being driven by solid top-line growth. A 7% increase in revenue year over year shows their core business is actually expanding. So how are they doing it? All right, so let's break down the specifics. Let's get into the anatomy of how they're pulling off these numbers, because this isn't just a lucky quarter. It's the result of some very specific business drivers. So the growth is backed by a really healthy sales pipeline, which is up a massive 40% year over year. Think about that. They're signing new deals, they're bundling their products, and maybe most importantly, their customers are processing more loans through the platform, up 11% this quarter alone. And this chart right here, this shows you exactly where that money is coming from. Yeah, they have a consumer banking division, but that mortgage suite, that is clearly the engine of the entire company, making up the biggest piece of their income. And this is the key to understanding their secret sauce. Which brings us all the way back to that first big question. How is a company that's so deep in the software game not only surviving the SaaSpocalypse, but actually thriving because of the very technology that's causing all the panic? Honestly, the crucial point is captured perfectly by their CEO, Nima Ghamsari. He's not afraid of AI making his clients more efficient. In fact, he's banking on it. You see, when his customers succeed, Blend succeeds. This slide, this is everything. This is the absolute key to their success. On the left, you've got the standard model, where you pay per user. In that world, AI is a threat because it reduces the number of users you need. But on the right, you see Blend's model. It's totally different. They don't charge per user, they charge per transaction. In this case, a funded mortgage loan. So, when their AI helps a loan officer process 5 times as many loans, what happens? Blend's revenue goes up 5 times. They have perfectly aligned their business model with the power of AI. It's genius. And they are not just sitting back and enjoying this unique position. Not at all. They are actively leaning into their AI advantage, and they're building tools to accelerate this dynamic even further. And here's a case in point. Their new AI agent, Blend Autopilot. Now, this isn't just some simple chatbot. It's a tool designed to automate the really complex, nitty-gritty parts of the mortgage process. It's directly helping their customers fund more loans and do it faster. This is them doubling down on their core strategy. And they have the financial firepower to make all of this happen. Ending the year with 0 debt and over $68 million in cash, that gives them incredible flexibility. They're so confident, in fact, they're not just investing in new products, they're also buying back their own stock, which is a really clear signal of just how much they believe in their future.
So, looking ahead, their own forecast shows this isn't just a flash in the pan. They're projecting continued healthy growth in both revenue and profitability, and it's all built on that unique AI-friendly business model. Blend's story is such a powerful reminder that in these times of massive technological disruption, the biggest threat isn't always the technology itself. It's having an outdated business model. And it leaves us with a really critical question. When that next wave of change inevitably arrives, is your business built to be washed away, or is it built to ride the very crust of that wave?